Okay, thanks for joining us at Fixed Income
No
for
problem.
the first year and agreeing to speak. So just tell us a little bit about yourself and your role at APG Asset Management.
Okay, well, my role at APG Asset Management is that I'm overseeing our trading operations. We trade, my team trades every asset category that we invest in. So that is from equities, credits, govies, but also derivatives for Dutch pension funds. FX hedging and interest rate hedging is in size the predominant asset categories that we deal in. So that's very much what's keeping me busy during office hours.
Okay, and thinking back to the past year, what would you pick out as your biggest challenge and what have you been doing specifically to overcome that?
Well, that's an easy one. I think that the lack of liquidity in markets is the main challenge for all of us trying to deal in capital markets. And today we've already spoken a lot about MiFID II, but MiFID II still has to come into effect. It has the potential to decrease the already bad liquidity even further. But we should not forget that all the Basel III related regulation is already in effect, and that's very much hampering the market making capability of the banking sector, the entire banking sector, and that's what at this moment in time is causing the lack of liquidity in markets.
Okay, and you touched on regulations. Earlier this year we did our benchmarking survey, and when we asked everyone about regulations and the impact, the number one thing that came out was the rising business costs that it created for their organisation. Would you agree that that's been the biggest challenge? Or?
No, I see it differently, because of course there's a cost attached to complying with regulation. I think that's also the obvious one to notice, because it's a direct effect that is impacting your business. On the other hand, for our clients, our participants in Dutch pension funds, I think the main impact is that it's actually a lot more expensive, not from a business perspective, but from trading, to manage their portfolios, which translates into lower returns. I think that the cost of trading, so not the cost of technology that we need to trade, but the cost of trading and the impact you're creating, that's indeed materially higher than it used to be, and I think that that's the main thing to worry about.
Okay, and a lot of our attendees and have mentioned at the event and ahead of the event about buy-side to buy-side trading and that sort of activity increasing. Is that something that you've been doing more of, or what are your sort of opinions on that?
We're definitely engaging with a number of parties on trying to solve that one. I don't think it's that easy. Why? Because buy-side to buy-side trading requires also diversity of trades. So, and apparently, at least that's what we've learned from experience by taking a look at it, is that often we want to trade the same bond, but also in the same direction. So in that case, you don't have a trade. So that's not the only solution out there. I think it's worthwhile to investigate, because what we just spoke about, the bank balance sheet, that's in my view a broken model. Trading fixed income via a bank balance sheet. That bank balance sheet, because of regulation, is getting so expensive. So I concluded that model is broken, and we need to find a different solution for that. And all-to-all trading, or buy-side to buy-side trading, definitely cuts out this bank balance sheet and should have a positive impact on the cost of trading, as long as there's a diverse set of people operating in such a platform, or however you want to call it, or venue, or how you want to label it.
Yeah, and then thinking ahead to 2015, what's standing out to you as being your biggest opportunity within fixed income, or new avenues that you are planning on exploring?
Of course, it's always difficult to look into the future and to tell what the success will be. So that's also why I'm here, trying to figure out what the most successful way of dealing fixed income will be. So I do not have a clear answer for you on what the right solution is and where the opportunities lie. I strongly believe in cutting out the middleman, taking out this bank balance sheet, because of regulation that's being made too expensive, and that's I think the start of the solution.
Okay, thanks very much for that, Thijs, and we look forward to your talk tomorrow.
Okay.